All right, I think we're ready to start off, guys. Give me one. All right. So hello, everyone, and welcome. Thank you for joining us today. I'm Neena. I'm the sales head of native teams in the APAC region, and I'll be your moderator for this session. So before we get started, let me give you a quick overview and an introduction of who we are. Native Teams is a global work platform built to simplify employments, payments, and compliances for remote workers, freelancers, and also companies alike. We have a strong presence globally right now in about 85 countries to date. So whether you're looking to hire internationally or receive payments as contractors, we make the process seamless and secure and fully compliant for your employees and yourself. So in today's session, we're going to talk about all about empowering Filipino global professionals and the companies that hire them with clear, actionable tax knowledge. And to guide us through this important topic, I'm excited to introduce to you guys our speakers. Domagoj, he's a senior tax consultant with deep knowledge and experience in the international tax law. Domagoj specializes in cross-border compliance with a focus on digital professionals and global contractors. Domagoj, say hi.
Thank you for a nice introduction, and I'm really glad to be here with you today.
All right. And also on the other seat, we have Aileen. She is a licensed certified public accountant and a certified fraud examiner with extensive expertise in accounting, taxation, audit, regulatory compliance, and fraud investigation. She is the managing owner of A2 Business Consultancy and a partner in the APAC's accounting PH. Aileen, welcome.
Hi, everyone. Thanks for having me, Native Teams.
Thank you. And myself, as mentioned earlier, I'm the head of sales for the APAC region with Native Teams, and I advocate for flexible work ecosystems across the APAC, helping businesses and professionals navigate compliance, compensation, and just remote talent solutions as well. So, guys, if you have any questions along the way, feel free to type them in the chat. We'll cover them during the Q&A portion at the end of the sessions. All right. So we're thrilled to have you guys with us today, and we've got a great session ahead, a lot of insightful things that you might learn along the way. So let's jump right to it, guys. Okay, so let's start with the foundations. What do Filipino remote workers professionals need to understand about their tax responsibilities when earning from abroad? So Philippine tax income brackets for globally sourced income. Domagoj, you think you can help us on this one?
Yeah, sure. So basically, the amount of tax you pay depends on how much you earn. We in Philippines have different tax rates. So the more you earn, the higher tax rate it can be. For an example, as of now, if your annual taxable income is 250,000 or less, you pay 0% income tax on that portion. The rates go up in steps from there. For instance, the income between 250K and 400K is taxed at 15%. And these rates can go up even higher to up to 35% for those earning significantly more. These are based on the train law, but yeah, don't worry. There's a simpler option for many freelancers that we'll be discussing today.
All right. So when it comes to employment, one sec. So when it comes to employment versus business income, how does BRI classify the remote work, Aileen?
Yes.
Yes, Aileen,
Okay.
I'm sorry, Aileen.
Okay. Thank you. So in terms of employment versus business income, if you are under an employment income, if the foreign company or if the company has you under a contract, pays regular wages, and if they withhold the taxes like a standard employer, the BIR may treat you as an employee. Otherwise, if you are paid per project or per invoice and the company does not withhold tax, you're likely classified as self-employed or a freelancer.
Interesting. All right. Thank you for sharing that part. When it comes to key compliance and documentations, Domagoj, you think you can help us out with what these documents we should prepare?
Yeah, sure. There's essentially three main documents. The first one is a certificate of registration. This is like your business birth certificate, let's call it like that, from the BIR. It shows you're officially listed as a taxpayer. So you will get your taxpayer identification number, better known as a TIN number, with this. The second one is official receipts. So when you pay, when your client pays you, you need to give them an official receipt. These are special BIR approved receipts. Think of it as your own professional way of saying payment received. And the
Yeah.
last one is Form 2307. You might hear about this if a Philippine-based client withholds some tax from you. For direct foreign clients, this is less common. So yeah, those are the three main complete key documents.
Got it. But also follow-up question, when it comes to like the breakdowns, what are the differences between salaried employees versus freelancers, Domagoj?
Yeah, so the employees of the Philippine-based company, their employer usually almost always sorts out their income tax. And as for freelancers, the story is a bit different. They are in charge. So the freelancer are in charge. They have to register themselves. They have to issue receipts. They have to keep track of their earnings and expenses. And the most important thing, they have to file their own taxes.
Understood. Okay. Thanks for sharing that one. Eileen, how about getting your insights as well on the different types of, like tax type registration based on their income source? Because this one can also be a little bit complicated.
Yes. When we say salaried employees for the remote employees, most likely they are employed with the business process outsourcing that is actually registered here in the Philippines. Can I cite some example of
Yeah,
the company?
feel free to do so. Of
Okay.
course, of course.
Can I name? Okay. Such as Accenture, for example, they have actually a branch here in the Philippines. So
Mhm.
if Accenture employed a particular Filipino remote employee, then they will be required to withhold taxes for that particular employee, and the Accenture will remit the taxes to the BIR. However, if the remote employee is acting such as a freelancer, then as Domagoj mentioned earlier, they will be the ones required to file their own taxes. For example, their clients are actually based outside the Philippines. They do not have branch here in this country. So they are called non-resident foreign corporations. So um, Accenture is a resident foreign corporation. If the company has no branch, then it is a non-resident. So if the client of that remote employee is a non-resident foreign corporation, then most
Yeah.
likely they will act as a freelancer, and their income will be treated as a professional or business income.
More of a
So
business
yeah,
income.
that's it.
All right. Thanks for sharing that, Eileen. So I think another topic also that usually a lot of, I mean, based on my experience, a lot of freelancers also ask every now and then is the impact of train law and basically the updated rules when it comes to this. Domagoj, any chance you can help us out on this one as well?
Well, yeah, sure. This is an interesting one because the train law offers a simpler tax route for freelancers. So, an optional 8% income tax. So, this 8% is on your total gross earnings if they are 3 million pesos or less annually, and you're
Mhm.
not VAT registered. So it essentially replaces the usual graduated income tax and the separate 3% percentage tax. So here's a quick idea to understand it better. If you earn 500K as a purely self-employed individual, you would subtract 250K, and the 8% tax applies to the remaining 250K pesos. So the big plus is simpler math. It can also mean lower taxes if you have few business expenses. But the key point is that you cannot deduct business expenses with these 8% options. That's bad. So if you have high expenses, maybe the traditional system where you can deduct it might still be cheaper. Also, it's important to know your choice of the 8% rate is for the whole year. So let's put it this way: the 8% taxation option simplifies things, but it's not automatically the best for everyone. I always advise to compare it with the old system based on your income and expenses to see what option saves you more money.
All right. Thank you. Super helpful breakdown from the two of you guys. Thank you so much. So especially about the different actually especially about the different tax options and how freelancers can be classified. So let's actually take a minute to digest and like and see what this really means in real life, especially for those new to the remote work setup. Many Filipinos, actually remote workers, still think that if they work for a foreign company, they don't need to file taxes here locally. But as Domagoj explained, and also Eileen, if you're earning while living in the Philippines, your income is still taxable locally, and it's still treated as like self-employment. This means you're seen as running your own business. So you'll need to register with BIR, issue receipts, file your own taxes. Might sound a bit much at first, to be honest, but once you understand the flow, especially of how the 8% works, and it gets a lot easier later on. It's also important to choose the right tax setup. Whether if you have like a lot of expenses, maybe the 8% flat rate would work out. If not, maybe later on, like the old process might save you more money also in the long run. And for companies hiring Filipino freelancers, it matters too. Because even if your team members aren't really employed in a traditional setup, they still need to follow the local tax rules. This is basically where native teams can help you out as well by handling everything from registrations to payout, making sure that everything is compliant on their end as employers as well. So both, thank you guys again so much. I know it can be a little bit overwhelming, especially if you're just getting started with this industry. But once you get the basics down, it's much easier to stay compliant and avoid the penalties. Now that we've got that covered, how to register and report your income, I think we're now moving on to the next topic, which is basically a little bit more exciting, which is how to keep more of what you earn as a freelancer. All right. So on this side, basically, this is how to maximize your tax savings. So Domagoj, now we understand the basics, how remote professionals actually reduce their taxable income. How can they do this legally and efficiently? You're on mute, Domagoj.
Yeah, not
There you
anymore.
go.
So the first one, and maybe the most important one, is deductible expenses. So
Yeah.
deductible expenses, they are costs you spend to do your freelance work. Let's say internet, part of your home electricity, your laptop, your software, your co-working space fees, or even training courses. These expenses can help lower the income that the BIR will tax you. So even if you earn a certain amount, you only get taxed on what's left after subtracting these work-related costs. It's, let's say, a way of showing that not all of your earnings are profit. Some of those go into doing the work.
All right. Thank you for sharing that. Thank you for sharing that part as well. Sec. Give me one sec. Okay, my screen just hung. Okay. All right. So, sorry about that. Anyway, so that one was a very good one, Domagoj. So I love the point when you said that not all income is profit. So what we've seen with a remote professional, to be honest, the one that's using native teams, is that a lot of them aren't aware of how much they could be deducting. To be honest, things like, internet bill, co-working fees, software subscriptions, even actually, like the subscriptions that they use on a normal basis could be also Zoom, Canva. These are all things that usually gets overlooked as well, when they're getting started. One of the features our users love in the native teams help us track these deductible expenses automatically through our platform. Basically, all the remote workers can log their business related costs, whether it's a new laptop, as mentioned earlier, a course that they took, a subscription that they use in the business, and we can help generate these reports to make it easier to calculate what we deducted, comes to tax time. Takes a lot of guesswork out in the process, and ultimately it helps professionals keep more of their income legally and efficiently, just like you said, Domagoy. All right, so I think this part we got covered. Moving forward to the next one. So we've got covered how to stay compliant locally and how to make most of the allowable deductions. But what if your client is actually working abroad? So this is something we hear a lot. I hear a lot also, that I get that also gets asked to me whenever we get into some calls. So basically, if I'm being paid by a US or an EU client, do I owe taxes twice? How do I manage compliance in both countries? Probably Eileen, you can help us out on this one. Eileen, you're on mute.
Okay.
You're still
Sorry.
there. You go.
I'm sorry. Okay. Nina, can I clarify if you have two or more clients? Something like that.
Uh, no, no, no.
Client in
So
EU,
if
client
you're
in
if you're
US.
getting paid by a US or an EU client, do
Okay.
taxes? Yeah, yeah. Do I owe
Okay.
taxes in twice? Do I have to pay taxes twice?
Well, actually, some countries, for example, foreign countries, actually tax the income before it is being paid to the Filipino remote worker. However, that particular tax withheld by a country, we can use it here in the Philippines as a foreign tax credit. Um, some may say that this is double taxation, but for me, as I can see, we just have double compliance. We have to comply to a US or EU client, which they withhold the particular tax for the income before paying to the remote Filipino worker, and the Filipino remote worker will also file the particular income received from EU or US client. But it is not double tax because we can use the withheld tax being a foreign tax credit. So, just a tip for the remote Filipino workers, communicate properly to the client that you are required to file here in the Philippines, so the withheld tax should be properly supported and the documentation shall be provided to the remote Filipino worker.
That's good. How about, I think, more of like to dive deeper on this topic when it comes to like double taxation risk, how do treaties reduce this part, Domagoy, if you don't mind helping us on this one.
Yeah, well, first I'm going to explain, then I'm going to make an example.
Sure.
So, let's say the question is, what if my client's country withholds the tax? So, sometimes your foreign client might be required by their country's law to
Mhm.
deduct some tax before they pay you. This could be anywhere from 5% to 30%. Of course, it depends on their country and the type of service. If this happens, do not panic. You can usually claim that amount as a foreign tax credit, something called foreign tax credit, on your Philippines tax return. This means that the tax you paid abroad can reduce the tax you owe here in Philippines. So often, peso for peso, up to the amount of the Philippines tax due to that income. But for that, you will need proof. You will have to ask your client for an official paper showing that they withheld tax. I'm how do you communicate that? So just first, you have to let them know that you're a tax resident in the Philippines, that you take care of your own taxes here in Philippines. If they talk about withholding tax, you can ask them about the tax treaty in their country versus the Philippines. So you can even get a tax residency certificate from the BIR. This might help apply a lower treaty withholding. For example, reducing 25 default rate to, let's say, 5% or 10% or 50%, as specified in some treaties for certain incomes, or even have a full exemption. So let's use a quick example here. There's Maria. She's a Filipino freelancer, and she earns $1,000 from a US client. But the US client withholds 15% of tax. So $150. Maria will therefore get only $850. So what does she do? First, the documentation is king. Maria needs proof. Number one most important document she must get from the US client is an official certificate of tax withheld. So this paper proves that those $150 was actually paid to the US government. It should show her name, the client's name, the gross income, and the tax that has been taken. Without this, claiming credit here in Philippines is very tough. So always ask your client for this if they withhold the tax, and you also have to keep your contract and invoice too. So yeah, that's it.
All right. Thanks for sharing that one and the examples as well. I hope this one was clear to everyone. So, and completely agree. This is one of the biggest concerns we hear from remote workers. Will I pay taxes twice here and there? So one thing I always recommend, to be honest, for me, when I talk to clients like this in a call as well as what Eileen also suggested earlier, talk openly with your clients and their HR team. Just let them know that you're a registered taxpayer here in the Philippines and you can handle your own taxes here locally. If they mention withholding tax, as Domagoj mentioned, you can ask if there's a tax treaty between your countries. Many times that can also be lowered or even removed in some cases. If needed, you can apply for tax residency certificate as well for BIR to support some of your cases. So here at Native Teams, what we do is we make this process easier by helping users track and organize their documents, invoices, payment records, and even any certificates received from foreign clients. That way, when it's time to file your taxes or your claims for this credits, everything is in one place.
Yes.
You can all be in one platform.
Yes.
Yes, Domagoj?
If I can just add, I just seen that we got a question from Josh Rickard. What about situations where the earnings are received in overseas bank accounts? Are they still taxable? So let's say that this would be closely related to the topic that we're talking about now. So the simple answer is yes. That income is still absolutely taxable in Philippines. So here's the key principle to remember. Your tax obligation is actually based on your residency, not the location of your bank account. So the BIR, the tax authority in Philippines, cares about where you are living and working and where you are earning your money. So if you're a resident of the Philippines, it doesn't matter if your client pays you into a bank account in the US, in the Europe, Australia, or anywhere else, because you perform the work while living here. That is considered a Philippine sourced income, and you're fully responsible for reporting it and paying the correct taxes on it here at home in Philippines.
All right. Thanks for answering that, Domagoj. Okay. So now that we've covered how to stay compliant both locally and internationally, let's shift the gears a little bit and talk about non-taxable benefits. All right. So a common question we get here is, are there any allowances in the Philippines that aren't taxed? And does native teams offer those, basically offer those? So these are often referred to as the de minimis here in the Philippines, and they can be a great way for both companies and workers to maximize compensation without increasing tax burdens. So this one, Domagoj, I know that you've prepared also a presentation on this quickly, so I'll share it over to you now, and you can take it over.
Yeah, thank you. This is a wide topic, the non-taxable allowances, and I must say that the Philippines are probably one of the best countries in the world with their amounts of the de minimis. Aileen, I'm sure that you're very familiar with the topic also. I'm going to start the presentation, and also you can jump in and feel free to comment on it. So I'm going to be sharing the presentation. Not sure if you see it. Philippines. Everything fine?
Yep.
Okay. So the allowances and optimization every remote worker and employer should know. So the question is, how to maximize your net income with essentially having the same total cost. So if you're working with native teams, you could have a higher net salary with the same total cost just by using non-taxable allowances. What are the non-taxable allowances or the minimi, also called the minimi in Philippines? These are essentially the payments which employer can provide to employee without being in obligation to pay any taxes or contributions on those amounts. So, unfortunately, these benefits, they're not available to self-employed individuals, freelancers, or independent contractors. However, if you're employed for native teams, you are fully eligible to receive them. And of course, there is something mandatory in Philippines, that is a third month salary. So there's a limit for the non-taxable allowances, but this is the third month salary, and non-taxable allowances are separated regarding that limit. So for an example, there's a meal subsidy, ride subsidy, laundry allowance, and etc. Let's just name them all. So first we have monetized use vacation leave. Then we have a medical cash allowance, actual medical assistance, rise subsidy, uniform clothing allowance, laundry allowance, employee achievement awards, holiday gifts, meal subsidy, collective labor agreement, and achievement awards. This is a salary breakdown where we can see a regular salary with the 50K total cost. So on a monthly base, you will be getting 38.4K of your net salary. So this net salary is a take-home pay. However, what we use here in native teams is that we implement the non-taxable allowances, de minimis tax allowances, in your salary, which is resulting, we're going to see it here, in 958 pesos per month of a higher salary. But on top of that, there is something called achievement awards, collective bargaining agreement, and medical assistance, on top which native teams can pay you 30K pesos more. So this will result in total of 41.5K of fully legally exempt tax income paid directly into your bank account each year. So this is actually essentially if you are on EOR of the native teams, but if you choose to be an employer and have your employees working for the native teams, you would also be eligible for this one. So what we do in the native teams, we calculate and structure for each of your employee and make their salary fully tax optimized. We have our experts who are available always for talk. It's completely free. And the most important thing is that native teams fully handles the payroll, the paperwork, and also we have allowance tracker on our platform, and it is completely free of charge. And yeah, that's it.
All right. Thanks for putting that together, Domagoj. So that was a great breakdown on non-taxable allowances which basically can be used, like smartly, especially for remote professionals and the companies, to be honest, that support them as well. So we've covered a lot today, from tax basics, deductions, to cross-border compliance, and now non-taxable benefits. So now I think both of you, if you guys are open, we're gonna open. If you guys are ready, we're actually gonna open the floor to the rest of our audience's questions. So if you haven't already, feel free to type in your questions in the chat. We'll do our best to answer as much as we can during the Q&A portion. So let's get things started, guys. Think I have one. So the maximum de minimis that can be given per year for an employee is 41,500, which is BIR compliant.
That is correct. Not much to comment. So 958 per month, each month, of a higher salary just by implementing de minimis tax allowances, plus 30K with the additional tax allowances, 10K each with a year. So the first one is the collective bargaining agreement, which we have settled in the Philippines. So you are entitled to pay yourself 10K by the collective bargaining agreement. Also for the medical assistance, if you need it, there's also 10K. And for the achievement awards, which is completely also legal, and we have it here available in native teams, you can pay additional 30K. So yes.
All right. So we actually have one more question on this side. Aileen, if you can help us out on this one. Opening a corporation in the US to receive income and then paying myself using dividends. How does the tax work on these dividends? Are they more favorable than earned income?
I think still we're going to look at the nature of the payment. It is still a compensation, right? So for me, this will still be under compensation of, or if you're registered as professional or freelance, this is your professional income still, even though it is disguised as a dividend from another corporation.
All right. Thank you
If
for that. Go ahead.
Domagoj could also add,
Well, yeah, I fully agree with you. Not much to say this on this one. Based So there are two layers of tax. This strategy creates two separate tax events. First, your U.S. corporation would earn profits and pay U.S. corporate income tax on them. And then there's a tax on dividends. So then when you pay yourself from those after-tax profits, that money comes to you as dividends. So our webinar guide here is very clear, stating that when you form a corporation, you're typically taxed again on the dividends you receive. This means essentially that you would have to declare those dividends on your Philippines tax return and pay personal income tax on them here in Philippines. So yeah, just confirming what Aileen said.
Got it. I think I have one more question on this side. I think we covered this topic also earlier. If you could just if you guys can just help me on this one again. So can I really be taxed twice for the same income?
Yeah, Aileen, will you go? Should I go?
Yeah, it's okay, Domagoj.
Well, yeah, the answer here is you shouldn't have to be. So, the Philippines tax strategies has tax strategies with many countries to prevent this particular problem. So, if your foreign client does withhold the tax, don't worry. Just make sure you get an official certificate, as we mentioned earlier, from them showing the tax they paid. So you can use that certificate to claim a foreign tax credit on your Philippine tax return, which actually directly lowers the tax you owe here in Philippines.
All right, thank you. And I think also another question we got is, I think we covered this also earlier. So what's the safest way to explain Philippine tax rules to my foreign clients? As mentioned also by both Eileen and Domagoj, keep it simple and confident. Just let your client know that, you know, as a registered freelancer in the Philippines, you handle your own tax obligations locally. If they mention withholding tax, tell them about the tax treaty between your country and between your countries, and offer to provide, you know, like tax residency certificate to sort it out. It shows basically your professionalism and you know your responsibilities as a local. All right. I think we're on time as well. So I think to close out, for the rest of the questions that we have, again, thank you both for joining in this session. But for the rest of the questions that we have in the chat box, we will respond to you privately as well, as we don't we're running out of time. So thank you so much for all those great questions. It's clear that the taxes can feel overwhelming at times, but having the right information and right tools for us, it really makes a huge difference. So let's wrap up today's session with a few key takeaways you can leave with. First, know your income classifications and registration requirements, whether you're a freelancer, remote employee, or somewhere in between. This determines how you can file and stay compliant. So second, use legal deductions like your internet, laptop softwares that you use, co-working spaces to reduce your tax liability the smart way. And third, always coordinate with your foreign clients or employers about taxes, communicate clearly, file on time, make use of tax treaties, and avoid being taxed twice. So here at Native Teams, we're here to make it easy. We offer a free tax savings assessment, as Domagoj mentioned earlier in the presentation. We'll be sharing the link in the chat so you guys can get personalized help. Don't forget to follow Native Teams, guys, on LinkedIn and sign up for our upcoming sessions. We'll be keeping insights coming for you guys. Thank you so much. And yeah, that's a question for today. And we'll wrap up. Let us know if you have any questions. Send us out an email. Thanks again for joining and hope to see you next time.